The broadcast is now starting. All attendees are in listen.
Good morning, everyone. This is Mark Raymakers with Insurance Agency Marketing. Appreciate you joining us here this morning for our IRA Maximization webinar. This is a recorded webinar, so what we will do is we'll email this over to you here probably later on this afternoon, so you get a chance to review it. If there's anything that we hit on there, you can certainly get a better understanding, review it at your leisure. And if you have any questions, you can certainly type those in the question box. We'll address those as we go. So I do notice that there are several new names out here this morning. And with that said, I'm going to go through some things that you may or may not know about insurance agency marketing services as far as the benefits, the services, the unique things that we can provide to you. You know, there's a lot of competition out there for your business, and we certainly do everything I think that we can through a lot of unique programs that we've got here. So let's get started with that right away here. So first off, we have our referred producer program. This is kind of a neat way for us to grow our business and for you to be compensated for that. So just like you like to receive referrals, we do as well. And so we have what we call a referred producer program. And first off, when you send us somebody and they get contracted, we send you a check for $50. And then every time they write a piece of business, you get 20 basis points on whatever it is that they write. Now, that could be traditional life annuities. Traditional life counts a little bit different. But for today's purposes, since we're really referring to this morning as a single premium strategy, we're going to look at that. So let's say that you referred to us 3 agents that write $1 million in total single premium. And yes, it's very doable, or $1 million in annuity. That's $6,000 in cash to you. And as long as they're producing, you will continue to receive checks. We send those out every quarter. And then we have our market reimbursement. This is something that I really appreciate. In addition to your commission, what we do is we reimburse you up to 50% of what your expenses are for marketing. So let's say, obviously, we are coming into a big month for folks to be holding Christmas parties or holiday parties, whatever they refer to them as today, but here we call it Christmas parties. So you have a party, let's say you spend $1,000. If you send us a receipt for that, we will turn around and send you a check for $500. Now, that's based on you having that in your account. So in this scenario, you'd have to write about $250,000 in annuity premium, single premium life, to get $500 in your reimbursement account. So as you write business, we put in the account and it sits there until you want to use it. So it's a great way for you to have someone partnering with you in your expenses of your business. The new producer bonus is something that we're really excited about as well. So for those of you I see that are new on here this morning, once you get contracted and you write business with us, you write $100,000 in a single premium annuity or a fraction of that for traditional life, in addition to your commission, we will give you either a $750 cash bonus, a 2-year producer website, so we can help you develop a website. Now, you can buy that as well if you don't want to earn into that. Or you can get an iPad. So that's the first level. You can choose one of those 3 once you reach that $100,000 in premium level on annuity or single premium life. Then there's the $300,000 level. That would allow you the option of choosing the Social Security or 3,000 piece mailing. That's a great way to get in front of more senior buyers. And I do know this is available for you to purchase if you didn't want to earn it. But agents that are taking advantage of that program have definitely seen a spike in their production. Or there's the $2,000 in marketing reimbursement dollars you can have, or a $1,500 gift card. Lastly, if you do $500,000, there's a 5,000 piece mailing and seminar coaching with Matt Gill, or 4,000 piece mailing and seminar coaching with Dave Pemper. These 2 are tremendous producers. They do seminars. That's how they get in front of senior buyers. They qualify for all of our trips. So they've got great programs. And of course, either one of those are for purchase as well. Lastly, there's the Ritz-Carlton Travel Rewards if you wanted to take advantage of that. Now, our back office support, I truly believe, is second to none. I've been in the business myself. I've spoken to a lot of advisors, been in this office now going on 9 years, and continue to hear how tremendous our service is. So you can see here, we obviously help you to work smarter, not harder. We provide you all the business building tools and resources that you're going to need. We do the case design for you. So as you write a piece of business, we scrub it. We get the application in that day. We order your exams, and we follow up with that particular carrier on a daily, not on a daily basis, but we follow up with you on a constant basis. So you're going to get emails, you're going to get phone calls from us. So you know what's going on with your case. You don't have to pick up the phone and call the carrier. We do that for you. Truly submission to commission support. So from start to finish, we run all your quotes for you. So again, that case design that we do for you, most everyone in the marketing department's been in the field, so they understand software, they understand products, and all the unique challenges that you have being in the field. And so, of course, our paperless contracting is one more thing that if you go to our website, you can certainly get that, or ask for anyone in marketing. They'll send you a contract, and you complete that one time. You don't have to fill it out every time you get a new contract or a new carrier or a new contract. It's just that one time. So it makes it really easy for you to add new carriers, so you're offering the best product available to the client. Our creative marketing solutions, this is something that we have really beefed up. Our staff is growing in that area. The expertise is growing, and really we've got some great stuff for you. So if you're not doing anything as far as marketing brochures, we do have customized pieces for you. We can also help you establish a logo that you can use for your business cards, any brochures, and they've done some really neat stuff. So if you haven't done that, it's kind of a neat thing that you can take advantage of here. We'll do that for you. And then lastly, in the digital area, there's, obviously we can help you set up a website, which I'd mentioned earlier, but then there's all the digital marketing, the social media, all those different types of things that we can help you out with in that department. So certainly take advantage of those folks over there. Just call and ask for creative. Then there is the website. Again, I mentioned this to you just a second ago. It's www.imzinc.com. Everything that you could possibly want to do business or to support you in your business is going to be on the website there. So contracts, applications, illustrations, product information, it's all there. Of course, we encourage you to call us here if we can help you at all during the regular business hours, but maybe before, after business, or even on the weekend. Everything is there that you could possibly need to support your business. Now, what we've done here, IAMS Wealth Management, some of you may not be familiar with that. With the Department of Labor ruling, we decided we want to stay ahead of the curve, so we've created our own RIA. Now, I'm going to do something real quick here. I'm just going to put out a real fast poll, and if you would mark yes, if you would like someone from the wealth management team to give you a call. So basically, by adding the wealth management to IAMS, what we've done is we've given you another opportunity for you to increase your revenue. And so those advisors that have gotten contracted through them are finding that not only are commissions up there as competitive and really unbeatable, but the fees are also very competitive as well. And this really helps client retention. So if you have any interest in maybe offering different types of securities to your clients, this is a great opportunity for you to do that. Everything is in one house here, and you name it, from life to annuities to long-term care, med sup, and any securities or equities that you want to work with your clients, that's available to you there. So great. So good response here. What I'll do is I will have someone from the wealth management team give you all a call for those of you that are interested, and we'll get back with you probably here today. So you notice that we're real big on training. We have webinars every day of the week, so Monday through Friday. So one last thing I want to do here is just gauge your interest in an all-expense paid life and annuity training academy. We fly you out on a Wednesday. We pay for your meals, your lodging, your airfare. And so when you go out there on Wednesday, we get you out there for a few short presentations on Wednesday. And then we do a full day training on Thursday, half day training on Friday, get you on a plane, get you back home. But again, we cover all your expenses for that. It's a great way for you to grow your life and or your annuity production. And for those of you, maybe you're just selling annuities now or just selling life, it's a great way to learn how to incorporate either one of those product lines into what you're doing today. And so we have speakers coming in from across the country that share their sales ideas. And generally, you're going to see that they're going to be top producing agents that do business with us. This is not a product training academy. This is sales concepts. And so anyhow, all right, great response, sir. I appreciate that. We'll go ahead and get you out the email, the agenda, and we've got our next event scheduled for March. All right, so we have our 2018 Marketing Summit. This is February 25th through the 28th in Scottsdale, Arizona. I guess the qualification, as you may refer to it as, ends this month. But generally what we do is we look at production over an 18-month period and then invite the guest and the producers. So this isn't just for the producer. We do this for guests as well. And again, this is our 2018 Marketing Summit. We've got a trip that we have every other year, and so it's a great way for you to be rewarded for your hard work. All right, so let's go ahead and get started on this real quick here this morning. So what we're talking about is the tax-favored reposition of qualified funds. And, you know, one thing I always look at is what's happening with your practice during the year. So I know right now this can be a really slow time. I just spoke with an advisor before I came in here, and he said he's shut down for the year, and now he's planning for 2018. So I think the timing is great for this. You know, as you go into a new year, you've got clients that are sitting with millions of dollars in qualified accounts that they're not going to live on, nor will they need in their lifetime. So what should they do with them? Well, you know, what I see a lot of times is they just stick the money into the bank. They take their RMDs, they put it in the bank, they sit there and they let it get dusty and moldy with that little minimum interest rate that they're getting on it. And at the end of the year, they pay taxes on it. So really, there are better places to go with it, and that's what we want to cover here real quick this morning. We're talking about transferring those funds into a generation legacy with Baltimore Life Insurance, and this is one of many different carriers that we do this with, but for this morning's purpose, we're going to talk about them. This is a great product. It's great for the client, great for the beneficiary, because remember, they're not going to have that tax time bomb when they inherit it. But the nice thing is it's a single premium immediate annuity coupled with the whole life insurance product. You can't buy them individually. You buy it as a package deal. So think of a chain link. You can't separate them. So what we have here is we first of all, with those qualified dollars, and I will stop and say this real quick. You can also use non-qualified funds for this because, as you know, maybe you've got a client who's very frugal. They put money into an annuity when they're maybe in their early 40s, and now here they are. They're 68, they're 70 years old, and they've got a lot of growth in there. So that means there's a lot of tax, right? So either way, you can use qualified, non-qualified funds. But for this morning's purpose, we're going to talk about qualified. So what happens is we roll that money from that qualified account into the single premium immediate annuity, the Generation Legacy product as it's called. And there's two different options. There's a 7-year SPEA and a 10-year SPEA, and that's based on the age of the client when they move the money over. So for clients that are 75 to 80, it's a 7-year pay. And for those that are 60 to 74, it's a 10-year. And here's the good thing about it too is a lot of times when you think of single premium life, a lot of folks think that maybe I'm automatically creating a modified endowment contract. On a traditional single premium life, you are, but in this scenario, you're really not, because you are moving that money into the SPEA. It still maintains its tax qualified status. But what happens then is as it's being liquidated each year, it's going into the whole life insurance policy, and it's not creating a MEC because we are staying beyond the 7-year MEC guideline. And, you know, obviously with the 10-year pay, it's not an issue. So the minimum premium for this is whatever SPEA payout, as long as it's a minimum of $5,000. And it also has a maximum death benefit of $450,000. So whatever that SPEA payout is, as long as it's not buying more than $450,000 in coverage. The other nice thing about this too is that if they're trying to diffuse that taxation for the beneficiary, there are some living benefits for them. They do have an accelerated death benefit rider on there. So what it does is, let's say you've got a $450,000 death benefit. It'll accelerate 50% of that for chronic home health care. And generally speaking, that is going to be a tax-free benefit. So the underwriting on this is pretty simple. It is a Table 4 standard issue. So think of any one of your senior clients that might have some general health conditions up to Table 4. If you're not real comfortable with underwriting, you don't know what that means, it's 25% per table above the standard mortality rates. So anyone who gets issued a contract, this particular policy, they're automatically a Table 4. Now I'm going to introduce its sister product called the Secure Solutions. That one will actually go up to Table 8. So if you've got a client who wants to do a true single premium life and put it directly in there, they'll go up to Table 8. Now I have periodically seen, maybe you've got a client who's got a small IRA and the taxes are not really that great. You know, maybe there's not a lot of benefit there. I have seen agents or clients, they'll surrender that account, they'll pay the taxes on the whole amount, and then put in the secure solution. So there's another option there. So real simple, underwriting is a matter of just completing the paper application, and then you do a phone interview. So once you've completed with the client, you dial a toll-free number, you introduce the client, you put them on the phone, they go through the application process over the phone. So they're going to ask the same questions. Make sure that they are consistent on their answers, because a lot of times what happens is you'll find that when they do a phone interview, they give the underwriter a different answer. So what the nice thing about that is once they're done with that interview, they hand the phone back to you, and the underwriter will tell you if they are approved or declined right there on the spot. So there's no waiting. Once they're approved, you submit the application, we get that case issued, and you get paid very quickly. And here's the thing, they underwrite for for mortality, not morbidity. So it doesn't really matter if the client will qualify for long-term care or an accelerated benefit. It's just as long as they are insurable for life insurance, then they'll get issued a contract. So the taxes on this. Taxes cannot be withheld from the SPEA payments on this particular product. Now, we do have other products available in our portfolio that we can do that. So if that's of interest to you and your client, then we can certainly look at a different product. SPEA payouts are fully taxable, remember, because if they're qualified, they will be. Now, they'll be partially taxable if they're non-qualified. Remember, non-qualified, anything over and above the cost basis is considered taxable. The SPEA and the death benefit are both payable at death if there are still funds in the SPEA. So imagine, if you will, you write this product and your client dies 2 years later. The beneficiary would receive the balance of the SPEA, which would be fully taxable. Again, that's the balance that hasn't been liquidated, paid into the life insurance policy. And then whatever the death benefit is, that would be considered tax-free to the beneficiary. They do not have to liquidate the SPEA to receive the full death benefit, okay? It's just like any other life insurance policy. You could have a client that pays 2 months premium on a traditional life and they die. As long as it's not contested, the beneficiary would receive the tax-free death benefit. So here's some unique features about it. It's immediate issue, as I mentioned. They approve it right on the spot. You don't have to wait for it to go through underwriting. Now, I will tell you, we've had cases that have been declined over the phone that we have been able to get approved. Now, that's kind of unique, but it does happen periodically. So 90% of the cases that we do are actually going to be approved on the spot. And so it's very helpful to know if you've got a case you're working on, to give us a call. We'll help you with the underwriting up front, so we know that you're not necessarily going to get a decline right away. Again, it underwrites up to Table 4, as I mentioned, and it does provide for lump sum benefits. So let's say in this scenario I talked about, where you had a $450,000 death benefit and they needed that chronic benefit, it'll accelerate that on a lump sum basis. So maybe the client still has a mortgage payment, they want that paid for. Maybe they've got some outstanding medical bills, they can pay those off. So that's kind of nice in that respect. Here's the other thing I like about this. You know, back in the day, some of you have probably written these where you would use a SPEA to fund a life insurance policy, and so you'd roll the money into the SPEA, and then the SPEA company, whoever that would be, ABC Insurance Company, sends your client a payment from the SPEA, and then they're responsible for sending the payment to the insurance company. They don't have to worry about that now. What happens is the money is handled internally. So if you could imagine, it's like you realize you have a hole in one pocket, so you take the stuff out of that pocket and put it in the other pocket where there is no hole. Basically what happens is the company handles all that money internally. There's no distributions of checks at all. So it's transparent to your client. Once they apply, they forget about it. It's all done. Now, they will receive that 1099 each year when a distribution is made from the SPEA. So here's the commissions on this product. Isn't this something? Ages 60 to 75, it's 14% commission. Ages 75 to 80, it's 12. So imagine you have a client sitting there with a $100,000 annuity. They decide that they want to go ahead and take advantage of this product and not have their children inherit the funds. That's a $14,000 commission if your client's 60 to 75, or $12,000 if they're 75 to 80. And here's one more thing to think about. I'm going to show you an example here in just a minute. If your clients leave $100,000 sitting in a qualified account and they die on that and they've named their child beneficiary, that $100,000 is included in their ordinary income, right? Someone's got to pay the piper, and unfortunately, when their children beneficiaries inherit it, statistically, those beneficiaries are in their peak earning years. So they've maximized or nearly maximized their income, and now they receive another large chunk of money that's fully taxable. Nobody ever wants to kick the gift horse in the mouth, but you know what? If your clients are frugal enough to realize that they may be paying 30 or 40% of that amount of asset to Uncle Sam, probably doesn't necessarily make a whole lot of sense to them. So let's look at an example of how we might want to look at this product. We've got a client, they're going to say they're 65 years old, they're retired, they're in a 15% tax bracket, and you've got a child beneficiary who's in a 25% tax bracket. So just like I was telling you, who's really going to win, who's going to lose here? So I have a $100,000 qualified annuity, and we're going to split this 50-50, or we're going to leave it in 50% of that annuity. We're going to, 50% of that asset. We're just going to leave in the annuity at 3%. We're going to take 50% of it, move it over to the generation legacy. So if you look at here, you can see if we left it in the annuity, and now again, we're looking at taxes due at death to the beneficiary, is $17,303 at a 25% tax bracket, which leaves a net payable to the beneficiary of $51,909 versus how that plays out over here on the generation legacy. That's a difference of $25,442 in tax-free assets that goes to the beneficiary. Or let's look at it, let's say if we wait for 20 years, you're going to see they get a little bit smaller. So now the client's 85 years old. The tax bracket here, now what I did is I assumed a higher amount at a 28% tax bracket to the beneficiary is $65,000 versus over here you look and see. So, you know, a lot of you might say, well, gosh, the longer I hold it, maybe the better it's going to be. That's true, but let's stop and think now. If that client's 85 years old, there's still going to be a benefit to the beneficiary. So let's just say that I'm going to do this on a side-by-side basis. Let's just say that we left the $100,000 in the annuity versus putting the $100,000 in the generation legacy. If you were to take that $100,000 and get it out of the annuity, okay, just move it all over versus leaving it sit there, you can see the difference. There's a $38,000 tax bill to the beneficiary on that $138,000, which leaves a net of $99,665 versus over here, if you look at what happens if they move the full amount into the generation legacy, the beneficiary at that point gains $55,000 in tax-free assets if they versus leaving it sitting in the annuity. Again, let's look at the 20-year comparison. It's $33,712. So even though you might be tempted to leave it sit in the annuity at 3%, and that's a pretty dang good rate for an annuity today if you think about it, versus putting it into the single premium life, the generation legacy, the beneficiary still wins. Okay, so I think you get the point. It's definitely worth looking at moving. So what I've got up here, this is a piece that I've created. This is an opportunity for you to go back and visit with your clients and really find out where their dollars are at. This is probably one of the areas that I feel that as an industry we fall down. Only 51% of the advisors, and this is from the Investment Advisor magazine, says that 51% of agents in this business go back and see their existing clients, which that's unfortunate. You know, that's a good example might be, let's say you go to a doctor because you've got cancer and they get you in remission and you never go back. What happens if that comes back? You don't know. You're missing out. And that's kind of like us. I mean, we're practitioners, financial practitioners for our clients. And if we don't go back and see them, I just think that we're not doing them good service. So what I've done is I've created a piece here. I just refer to it as a personal arrangement guide. You can put the client's name in here. You can put their address there. You put your name here and your address there. So basically what happens is when the beneficiary has gone through the deceased papers, they have this thing to refer to. So this is kind of personal. I mean, obviously, there's a lot of things in here that I've created that may not necessarily be so beneficial to you as an advisor, but I'm just going to give you some quick ideas here on how I would use this. So whenever we do our training events, like the one we talked about, our academy, I like to ask how many of the advisors there know their clients' children. And I'm surprised how many hands do not go up. I guess maybe I'm not so surprised if we're not doing good reviews with our clients. But here's an opportunity for you to meet your clients' children, because they're going to be the beneficiaries one day. One day you're going to deliver a check to them. So why not get to know them now? Find out what it is that they have for assets and make them clients. So here's your opportunity. Get those clients' children's names, phone numbers, cities, whatever. Because now you've got a source to go back and see them. Here's another thing I do like. So for example, a lot of times if your senior clients have been in the military, their pallbearers will be some of their military friends. Maybe it'll be their brothers, whatever it is. The point here is that, again, here's another one. Please notify these people at my death. Those are important family members or dear friends. Those are also sources of referrals. So see if you can get a chance to be introduced to them. And then I go down here and I list where are their funds at? Where are their dollars, their investments, their annuity CDs? Where are their insurance policies at? And you know something? If they're leaving these blank for life insurance, they probably don't know who their advisor is anymore because they have not been staying in touch, okay? Basically, this to me is a wealth of information for you to do a better job of planning, a better job of you to come in there and to review their information. Because if, for example, if your client does not know who their life insurance person is, or when the last time they reviewed their policies, chances are they're in for some big surprises, especially if they have some of those universal life policies that are totally underfunded. So again, you get the point. This is a great form to be doing that, to go back out. And what I would recommend you do, I actually fill this out for my wife so that when I pass away, assuming I'm going to go to first, I'm a little bit older than she is, but let's say that happens and she knows exactly where everything is at, who to call. So it's a neat piece that you can take a copy of after you've reviewed it, put it in the file just in case your client loses it, right? And then they can keep a copy with their important papers. Here's another form, real simple. If you're not doing much or anything in life insurance right now, this is a simple form that I've created. It allows you more of an opportunity to ask the right questions to find out if there's other areas that you can help them. So you'll notice some of the questions on there. When's the last time you reviewed your life insurance policy? As an agent in the field, that's one of the first questions that I asked anybody I talked to. And because what happens then is, well, gosh, I don't know, not since we purchased the policy. Why don't you go grab that policy? Let's take a look at it. Okay, so the idea behind that is let's look and see what they have. If they've got a universal life policy that's underfunded, it's in trouble. Not only that, but if they've got an old whole life insurance policy, I like to call them those old wedding policies they've had for 40 years, they're probably paid up. They probably have a net amount at risk of maybe $1,000 or $2,000. This is a great way to get conversation going. So you can see, and even some of the questions, a lot of times it happens when I'm working with annuity advisors, they don't know what health questions ask. So this is a neat little part down here in the bottom to find out what their health condition is like. I've also created this piece here. It's called Why the IRS Loves Annuities, and this is a great way for you to start talking about those annuities that you've written. What is it that the IRS likes about them? They love the qualified ones, and we all know why, because every single dollar in that's going to be taxable, and so Uncle Sam can help fund all of those expensive programs out there by utilizing those annuity dollars. Okay, so here's some points of interest, some things that I think that if I were you, some things to think about or how you would explain this to your clients. So when we talk about this generation legacy product, the payout from the SPEA will satisfy the RMD requirements. So that question comes up a lot. In fact, by utilizing this product, you can help actually reduce the RMDs from other qualified accounts that they have out there. And why is that? Well, let's use that $100,000 example where you've got a 10-year SPEA payout. Now, if you stop and think, whenever you're calculating the RMDs, you're looking at the lifetime of the client, right? Well, what we've done is we've taken a lifetime and we've narrowed it down to 10 years. So we're actually taking out more than we would actually have to. So that's a positive. The proceeds from life insurance will pass tax-free to the beneficiary versus having them inherit that qualified account, which is fully taxable. 100% of the qualified account is taxable to the beneficiary at death, so that's one of the reasons why you want to mention that to your senior clients. Placing the dollars in generation legacy increases the death benefit of the annuity proceeds. So if you recall in the previous slides, you'll see where when we move that money into the generation legacy, the benefit that the beneficiary will receive is higher than what the annuity value would be, plus it's tax-free. And the agent earned commission. Let's say, for example, here's one thing I like to point out. If you want to quantify this, let's just say that in 2018, you are going to make this a part of your practice. You're going to ask your senior clients, do you need those qualified accounts? And I always say, look at those clients that are turning 70 this year in 2018, because this is the year they have to start taking their RMDs. So ask them, do you really need it? You'd be surprised how many of your senior clients, if you're not talking to them, are taking those RMDs and putting them in the bank. If they say, I really don't need them, here's an opportunity for you to move them. So let's say you do $50,000 in qualified accounts once a quarter. That's $28,000 more that you add to your bottom line that you weren't bringing in before. That's just $50,000 every 3 months, $28,000. On the low side, you're talking 12%, right? Because that was what the difference would be in commission for the older client. So here's the sales opportunities. Again, any client with qualified annuities, look for those files out there, whether you're doing 65 years up to, we issue up to age 80, right? I do have a product that'll issue up to age 85. So look at those client files. If you're not doing anything with them, and now, things get a little bit slower, especially next week as we get closer to Christmas, right? A lot of those clients are going to say, call me after the holidays. This is your time to plan. Go through those files. If you have a CRM, one of those client resource management type programs out there where you can look through those clients. Put those in the front of your things to do when the first of the year comes around. Schedule appointments. Look for those non-qualified accounts as well where there's a tremendous amount of growth. That's another opportunity. Clients with RMDs, maybe. So here's a situation. Maybe you've got a client right now that is actually receiving their RMDs and they don't need the funds, they're just putting them in the bank. It's not too late to put those dollars into this Generation Legacy product we talked about. So keep that in mind. Clients with CDs, excess checking or savings accounts. You're sitting there with all that money, they're doing nothing with it. This is a chance or an opportunity for you to consider looking at putting those into a single premium life policy as well. And the other thing too is it's always nice to get the conversation going. And I know a lot of times agents and advisors are not necessarily going out and doing a review. So this is a way for you to get the conversation going. You can get copies of this Why the IRS Loves Annuities brochure. It's a simple, it's like a 5-minute read. It's super short. It gets your client thinking about their existing annuities right now. You put a letter with that and say you're going to follow up with a phone call and discuss the annuities that you've written with them to see if really they're sitting in the right place for them today as well as for their beneficiaries. Okay, with that said, let's open this up to questions. If you have any, go ahead and type those in the question box. I noticed that there were some of you that just came in late. I apologize that you weren't able to join us sooner, but the fact that you have jumped in here, you will actually get a recording of the webinar. So the good thing is you get a chance to see what we discussed here this morning. So one of the things I'd like to give you a quick heads up on is that I will be following up with a phone call here to see what questions you might have from this, to discuss the product, to discuss some marketing strategies. So there, again, this is a chance for us to talk one-on-one. So again, my name is Mark Raymakers. That's who will be calling you. I know a lot of times I'll call people like, who are you? So yeah, that'll be me calling you probably here by the end of the day today to discuss this webinar. So my question box is empty. I want to thank you for taking time to join us here this morning. I encourage you to go out to our website, which is, again, www.imzinc.com. And you'll notice that we have a webinar schedule which outlines all the webinars we have for the month. It also has all of our recorded webinars, except for those where sometimes the carriers do not allow us to post those out there, which, that's okay. That's understandable. That's why it's important if you're interested in a webinar that you join us. You pencil that in your calendar and you take time to get on here with us. But again, most of those are going to be recorded. Most of those are going to be out there on the website, so you'll see the recorded webinars. But anyhow, okay, enough said. I'm going to go ahead and wrap this up here. Thank you so much for joining us. We certainly look forward to seeing you on an upcoming webinar. Expect a phone call from me here within the next 24 hours. Thank you again. Have a great day. We'll talk with you soon.